Welcome to the Passive Income Podcast. I am your host, Dividend Dave. For those of you following me on Twitter, know that I have been working very hard behind the scenes to book several upcoming guests. I do not have a guest for this episode, so I thought I would go over my watch list, my current watch list. However, if you would like to be sure to not miss any of these incredible upcoming guests, subscribe and turn on notifications, and you will be sure to see. Like I said, I have several upcoming guests booked through the rest of this month and into next month as well. So let's just get into looking at some of my watch list. This is Yahoo Finance. So as we go through this, I will sort of let you know what I own and what's on my watch list. Just a quick look at today's market. This is all Canadian, all in Canadian dollars. So the S&P TSX is up, the S&P 500 up, the Dow up, Canadian dollars up slightly, oil, even Bitcoin is listed over here is up a little bit as well. And so basically on the way the Yahoo Finance watch list works is just the last one that you add is the one that goes to the top. So the last one I added was DFN. I do hold a position in this, which this one, when you look at it, you go, oh my goodness, 17.91% yield. That is unsustainable. You say to yourself, oh my goodness, how could this be possible? And I'm just going to kind of click on this first article. I believe this is the one I was looking at earlier today. And you scroll down and you go, oh, well, they own in this, uh, these 15 companies that they owned: Bank of Montreal, Bank of Nova Scotia, Bell Canada, CIBC, CI Financial, Enbridge, Manulife, National Bank, Royal Bank, Sun Life Financial, TC Energy, TELUS, Thomson Reuters, TD Bank, and Transatlanta. So all of a sudden, you're a lot more confident in their ability to continue this ridiculously high dividend yield. So I own a small position in that one. Now, just where did we go? Oh, the ad came popped up at the top. So yeah, that's dfn.to. Closed today at $6.64 Canadian, down a penny from yesterday's close. And again, you look at the companies that they own, the Dividend 15 Split Corporation, and you're just like, okay, well, when you dig a little deeper, you don't have to dig that deep. Like I literally clicked on the first article, right, where it's okay, several several great Canadian companies. There was 4 or 5 of the Canadian banks in there. Both this one, Bell and TELUS, um, Manulife and Sun Life. So very solid pick. And shout out, I can't remember who on Dividend Twitter uh, turned me on to this one, pointed this one out to me, and so yeah, I do now have a small share in that. I'm sure I will continue to dollar cost average into that one over time. And BCE, Bell Canada, looks like they closed slightly up today, $58.86. I have a very small position in Bell Canada. I do plan on continuing to add to that position over time, just dollar cost average in. And again, $3.68 annually. So you divide that by 4. This is a quarterly dividend, but that's a very nice 6.43% yield. If I recall, I'm sure I've done this math. I believe it's 92 cents per share. Nothing wrong with Bell Canada. Anyone in Canada knows that Bell Canada has been around since telephones were invented. So, Bank of Montreal, I do not own this one outright. Again, I have exposure to it in DFN. Same with Bank of Nova Scotia. So BMO today closed at $119.60. We'll take a quick look at their chart, and you will see that they have a $5.56 annual dividend, 4.84% yield. So again, you divide that by 4 to get your quarterly dividend. I haven't done that. I'm not sure what the math is on that exactly. Oh, these ads are going to drive me crazy. Next one down was Bank of Nova Scotia, very popular. All the Canadians here are very popular. They're good buys. We all know they're good buys, not financial advice. And a nice dividend of $4.12 annually, divide by 4. So what is that? $1.03 per quarter? Sounds about right. 6.43% dividend yield. As of close today, $65.87 Canadian. So again, another attractive Canadian bank. Every time I click back, it's going to go to the ad at the top. Here is, if you've listened to some of my podcasts, you know I have I don't want to say fairly healthy, but somewhat healthy position in Sir Royalty Income Fund. They own restaurant chains. As of close today at 14.45, their annual dividend $1.08, 7.68%. So that's a in that higher yield range, above the 6%, which is nice. I believe it works out to, I don't have my calculator on me. This is again divided by 12. This is the monthly dividend. So 108 divided by 12, roughly 9 cents per share. Actually, I think that's exactly 9 cents per share, right? And next on the watch list, I have Royal Bank. Again, I do not own any of the banks outright, only with my exposure in my small position in DFN. I do, however, personally use Royal Bank as my day-to-day banking. You may have heard me mention in past podcasts as well that my mortgage is through Bank of Nova Scotia. That's just kind of the way it worked out with the mortgage broker. Annual dividend 5.12. So if you do the math there, it's a quarterly dividend divided by 4. That sounds like that's about $1.03. $1.03 sounds right. $1.03 per share quarterly, 4.34%. Closed today at $122.02 Canadian. Royal Bank, can't go wrong. Can't go wrong with any of the Canadian banks. And next on watch list, Enbridge. I do not own any Enbridge as of yet either. It is obviously on my watch list. Should be on everyone's, at least every Canadian investor's watch list. I know I have a lot of American viewers that are learning a lot about the Canadian market sort of as we go. Obviously, we're learning a lot about the US market as well, as I have many American guests on the podcast. As of close today, Enbridge 51 cents with a annual dividend of $3.44, 6.92% yield. So obviously under 4, that's less than $1 per share quarterly. You can do the math there. Just divide 3.44 by 4 to determine the exact quarterly dividend per share. Moving right along, AP, Allied Properties. Another one I do not own. It's a REIT. Many of you know I am a huge fan of REIT. There'll be a lot of REITs on this watch list. Odds are good this is a monthly dividend because it is a REIT. So $1.75 and 6.59%. Oh my goodness, why don't I own this one yet? I should have some of this. So another very strong REIT. You can dig deeper into that one. Obviously, do your own research. I've looked at it for a long time, and I'm looking at that annual dividend and that yield, and I'm thinking, why don't I have it yet? at a share price of $27.43. And that's actually up 47 cents today. So it had a pretty good run today. Next up, excuse me, next on the watch list after Allied Properties, we are right into INO. INO, this one is slightly disappointing because it's my understanding, I'm quite sure that they did just slash their dividend. So I'm down on this one because once they slash their dividend, then their price also, um, obviously, there's a huge sell off. So the price has a bit of well, more than a bit of a slide down to $4.37 Canadian and 41 cents per share divided by 12 gives you whatever, like, say, what is that, about 5 or 6, less than that, 4 cents a share monthly, but a very high yield. So if you were to get in now, you'd probably be doing good, 9.42% yield. That's a high yield. However, if you got in like when I did, little disappointing, but I'm just holding it. I'll let them keep paying me the dividend. Maybe that dividend will start to increase again in the future. Maybe the price will increase again in the future. I'm not really interested in selling what I have now at a loss. I'm just going to hold and see what happens. Dream Industry, Dream Industrial, another REIT. Like I said, I have a lot of REITs on my watch list. I do not own this one. This one has been on my watch list a very long time, but I've never pulled the trigger on it. Trading at 10.69 per share, 70 cents annually. So again, it's a monthly dividend. Divide that by 12 to see what you're getting per share. 6.75% yield, very healthy yield. That's definitely a good one. If you're looking at primarily yields and primarily dividends, obviously that's a good one. Obviously, you're going to want to dig deeper into that to look at their financials and other, the rest of their profile, historical data, all their statistics and whatnot. I'm just kind of quickly going over my watch list to let you know what either I'm looking at because it's watch list, or also what I already own. POW. This one I do own some of. I can't remember exactly how much. Not a huge position, but enough that I'm getting a nice quarterly dividend. Trading at $30.95. I'm quite sure my average price is a little bit higher. But again, you look at this, $1.98. So you divide that by 4, it's a quarterly dividend. So roughly 50 cents, 49 cents per share, and 6.49% dividend yield. So POW Corporation does own Wealthsimple, and Wealthsimple is one of the most popular trading platforms in Canada now, as there are zero fees, zero commissions for trading Canadian stocks. So the majority of us on Twitter, on DivTwit, on Dividend Twitter, I'm sure are all using Wealthsimple to avoid paying the commissions that the banks charge. Algonquin Power, very popular. I do have a position in Algonquin Power, relatively small. I can't remember exactly how many shares. I honestly, as we go through this, I can't remember exactly how many shares I own on any of these companies. So, Algonquin Power trading at $14.43. That's up 28 cents from yesterday. A dividend of 99 cents per share. This is also a quarterly dividend, so roughly, just on 25 cents per share per quarter, and 6.78% yield. And honestly, again, not financial advice, but I believe at the $14 mark, or 14.40, $14.50 mark, Algonquin Power is a steal at that price. So take that as you will. Like I said, not financial advice, but definitely Algonquin. No, excuse me, sorry. Algonquin Power is definitely a fan favorite among many Canadian investors, and I'm sure American investors as well that invest in the Canadian market. Same can be said about Pembina Pipeline. I do not own any Pembina Pipeline. Currently trading at $43.31 and a nice healthy dividend of 261 annually. So again, divide that by 4 to get your quarterly per share dividend and 6.17% dividend yield. Moving right along. Remember to subscribe. Remember to subscribe so you don't miss any upcoming guests. I have so many upcoming guests on the Passive Income podcast. Canadian Western Bank. Again, I do not own this one. Another Canadian bank stock. This one would not really be considered in the top 6 Canadian banks, but it probably is a strong 7th. And again, a nice $1.24 annual with 5.73% dividend yield. Again, I do not own that one. It's been on my watch list for a very long time. Perhaps someday I will pull the trigger on that one. And next up, Extendicare. So you may have heard me talk about Extendicare in some of my past podcasts, where I do hold a position in Extendicare. It is one of my healthcare stocks, and again, it is a monthly paying dividend. So 48 cents, 48 cents divided by 12. Is that 6? I believe. Oh no, it isn't. Do the math for me. Somebody in the comments help me with the math. But 7.14% yield is a pretty nice dividend yield, and healthcare obviously is, for me, I think it's a pretty good. I don't want to say safe bet because nothing in the stock market is 100% safe bet, but we all know healthcare is important. So, just go from there. Take it with a grain of salt. I'm still upset at myself that that number's not coming to me. I should know. Oh, 4 cents a share. Yeah, of course. And moving right along. Honestly, I was expecting this to be longer. I'm not sure where we're at on timing. Oh, we're already 20 minutes in. Maybe I will have to break this into a part one and part two. I'm not sure. We've gone through Extended Care was the last one. Suncor, another energy stock, another fan favorite on the Canadian market. I do hold a position in this one. This one, uh, you may have heard me say, I did not time the market. I locked out on the market. So currently trading at 44.39. I bought into this at around 33, and you see over here they had a 52-week high of 53. So I sold it. I sold some around 50, maybe even close to 51, but I did hold on to enough to keep my dividend. Again, that $1.88 annually, divide by 4, and you get your 4.35% yield. So again, I definitely didn't even try to time the market. I just happened to get extremely lucky on that one, buying it at a very nice, close to their 52-week low, like I said, around 33-ish, and selling close to their 52-week high. Again, definitely was not trying to time the market. Simply lucked out on that one. And beyond Suncor, I'm sorry about this scrolling every time I click back. I know it's a little annoying. Lithium America is a very popular one too among some that I know. I do not hold a position in this one. I for a while. So as we all know, with EVs, electric vehicles, making a huge push, that lithium batteries, lithium mining is going to be. Oh my goodness! I just noticed they no longer. Oh, maybe they never did have a dividend. Maybe that's why I don't own them. But I did start watching them. So this says the 52-week range is 24. So I've been watching them for over a year now then, because when I first started having Lithium America on my watch list, they were closer to $17. And you see the 52-week high of 53. So again, if I had been not timing the market but lucking out on the market, I could have bought some at 17 and sold at 53. But we all know that's not the way it really works, right? You just dollar cost average in and hold on for dear life. Hodl, as they say in the crypto community. Hold on for dear life. Entourage, this is, I'm not even going to get into this one. This is very disappointing. This is a marijuana stock. Uh, Standard Lithium, that lithium company. This one, again, I did kind of luck out a little bit. I don't own a lot of it. I did buy some at, I want to say $4, maybe less than $4. And again, you'll see their 52-week or 52-week range between 492 and almost 16. So again, I've been into this particular stock for over a year because I did get some at 4 or under 4, and I sold some, I want to say at 12, maybe 13, and kept some just because who knows what's going to happen with the lithium as EV electric vehicles and lithium batteries become much more prevalent. Okay, I know I have a huge watch list. It goes way down here, so maybe we will have to turn this into a part 1 and part 2 series. IT, Canoe EIT. This is also oh, this one I regret a little because I had a nice, very healthy position in this. As you can see, $1.20 annually, so per month they're paying 10 cents per share. And yeah, I had a very healthy monthly dividend coming from this, but I sold it. I did sell it at a nice profit. I made a profit of about $1,000, but I would have, after another year of just holding it, I would have made that same $1,000 in dividends. So I kind of, well, I'm not kind of, I am kicking my butt for selling that. I am buying back my position in that. So I'm just, you know, well, it is what it is. Okay, moving on. Thank you so much for watching, everyone. Be sure to click that like button, subscribe so you don't miss any of my coming guests. And thank you so much for supporting the Passive Income Podcast. Tell us, tell us what are major in the top three. So it's probably number two. Bell is probably number one. Telus number two. Rogers number three. I'm not even sure who's ranked higher in the telecom Canada. I do not own any of Telus yet. You've probably heard me half jokingly but half serious say I'm buying enough Bell that their dividend will pay me to buy Telus. So I closed today at 27.42 Canadian, a annual dividend of $1.35. So again, just divide that by 4 to get the quarterly dividend. But as you can see, a nice just over 5% yield. I don't think you can go wrong with the telecoms in Canada. Again, my opinion, not financial advice. Smart centers, another very popular one. And you know what? Maybe we will just end it there. We'll make it a little bit of a shorter podcast tonight, and then I can move on and do this again for part 2 of my watch list at some point another week where I don't have very many guests lined up. So again, please be sure to subscribe, click the like button, turn those notifications on. Definitely turn the notifications on when you subscribe. You're not going to want to miss several of these upcoming guests I have. Thank you so much for watching, and we'll see you again in the next one.